But you're an investor, and watching what the markets have done, like picking straight up for months at this point, what do you think? What's going to happen?
Well, yesterday I was adding to my positions. There was a pretty good hit. And I don't know, I'm not saying that people should buy it, but there's a company called Option Care, Home Infusion, and the stock's down 25%. I think the company, they had a presentation yesterday. I wasn't able to go to it. One of my people did. I added to that position. I have so much depot, it's not prudent. I added to my J.P. Morgan position. I added to my Parker-Hannifin position. That's a capital goods company, extremely well run by a fellow Tom Williams, Bucknell graduate, by the way. I feel, look, where else can you go to get some kind of a decent rate of return than equities? And look, I think balance sheets are in pretty good shape. I think the economy's got probably 1.5% to 2% in it next year, hopefully. But I feel pretty good about that. I think it's now spiritual that dividends be regularly increased. But by the way, Parker-Hannifin is one of the 4 companies that's raised its dividend every year for the last 60 years.
What are the other ones?
I don't know.
So.
Ken, what do you think of the environment? You've got the Charles Schwab TD Ameritrade deal. So we've got customers now with zero fees and this significant move towards passive investing. Do you think that philosophy?
Well, that's all that Schwab deal looks like to me is the more cash you get that's sterile, that you get some kind of a yield on for the house. In other words, if I have a brokerage account and I got some cash in it, maybe it's $39 or $89, whatever the hell it is, you add all that money up, it's a fairly good number, and that's where they make the vig. They're not making anything on commissions, okay? I would rather, frankly, at this point in the economy, rather own an index than be screwing around with private equity deals, because the money out there is huge in private equity. Somebody's going to get hurt. By the way, I saw a study that those deals that were done at over 10 to 12 times EBITDA had a 60% chance of going bankrupt. That's a high number. And their yield returns aren't there. Right. So I worry about that. But on the other hand, I think through the noise, there's some great names out there. Another one that I like a whole lot is General Electric right now. I think Culp is doing a hell of a job, and they had a presentation yesterday on healthcare.
Right. You just got back into GE.
I got back, and Stan actually pointed it out to me. Stan made a big bet, and I got back into it, and I like it. I spent some time with Culp. I think he's got his head screwed on right. He brought a brand new CFO in this week, and I think she's first class.
All right, we got to go.